Hello guys. Thanks for joining overall analysis. So basically right now, because now a lot of people have actually been complaining about them not being able to manage their psychology. So right now we've came up with a way to actually psychology actually stands in a way of so many traders. From doing here is gonna actually help you guys to actually be profitable traders. So guys, the first thing that you want to do is actually to create a trading plan. A trading plan basically actually guides you religiously on what will you be waiting for before you actually take a trade, and also where will you be getting out of the trade, and also the stop loss of the trade basically. So it's just basically rules that are actually combined into one thing, and then it forms one thing that's actually that actually guides you into your trade. Okay guys, right now I wouldn't say that as a trader you just basically need to have money in order for you to actually trade. The best way to actually get to know, or basically to get to actually master psychology, it is to actually to open a demo account and then apply the rules probably for 2 months or 3 months. And then once you see consistent growth in that account, then from then you can go for a live account immediately. So basically it all goes with practice. The more you practice and the more you become dedicated into your chat, even though you don't have money, and then it works out easier for you. Unlike that thing, because right now we've actually gotten used to that thing of I'm gonna trade when I have money. I'm gonna deposit money. Let's say I'm gonna deposit 2,000 rand into my trading account when I have money, and then I'm gonna trade. But then once I have blown that account in a week's time, and then I stop looking at charts up until I have the money after 2 or 3 weeks. You get me? It doesn't work. That should give you more courage to actually go back into the charts with the demo account. Try to do things right up until you get it right, so that when you have money and you found your account, you're already found of the rules that consistency when it comes to trading. So yeah, I'm not gonna do anything much. So this is gold. I'm just gonna be analyzing gold. So I'm just gonna be take a trade. When to execute a trade, what do you look for before you can actually execute a trade? And then once you have all those rules lined up, and then from then you can be able to actually take your first trade after practicing, of course. So I'm not gonna do anything much. I'm just gonna go to my monthly time frame. My monthly time frame is actually gonna guide me with a lot of things. And just some of this clean chat. It is clean as it is. So the first thing that I would want to do right now, it's to be and also highlight areas where by just looking at the chart, the market actually turned. We can go all the way to 2004, all the way to the market has done previously. It's going to do it again. You can point. Let me just make this 2. Okay, that's my S point, and this is my basically my recent lowest point. Then from there, and from just gonna that area there. This area actually comes from these 2 points. If you can look at it clearly, okay, we're actually coming from these 2 points. Here we saw the market actually 10. So hence I've drawn those. So again, it's very crucial actually, because yeah, the market actually turned twice. Yeah, we saw the market actually turning here 3 times. Okay, so basically, hence that's where it's actually coming from. So everywhere where you see a major turn, you're just gonna be drawing lines. You're gonna find it easy to trade. Let me just take this down there. And then you're gonna find it easy to trade. Okay, yeah, I had sort of like resistant. Okay, yeah, I saw the market actually turning. I don't know why it was turning here, but then I'm just gonna draw a line. It as a resistant, and then it came back to support there. Hence I have that line there. Should I draw another one here? Yes, I'm just gonna draw another one there. So here we saw the market, then we saw the market the recent turn before that impulsive move, long impulsive move to the upside. It turned there as well and then went to the upside. About being predictive. You have to be you basically react to what the market actually wants you to see. Again, you basically react to the way the market is actually acting during that point and certain time. It turned twice there, then came back to act as a resistance before it supported the market to the upside. So you're just gonna draw lines. It's all about lines again. I'm also gonna draw that one. Okay, yeah, this one is very far back to I think, let me look at it. Back to 2008. So I think that's enough. I think that's enough. I think this is enough right now. This according to my understanding of what the market is actually showing me right now. Resident Bank, the market has been going to the upside, creating those high highs, creating those high lows, So basically this is what I have. So I still have to not break above. Yeah, because remember we're on an uptrend. We're on an uptrend. So that's how the trend actually looks. And to confirm that we're actually on an uptrend, you can just draw a trend line. A trend that's gonna actually guide. This is what I have here on. So remember, when you draw a trend line, you actually have to make it a barrel. So basically it has to be a supportive trend. So my resistant trend in this case is gonna be that one. So I'm just gonna draw it like that. And remember, the basic rules to when you are book. The first one we wrote it successfully in 2021. And then yeah, people actually reacted positively to it. But then the more you keep on trading, there's some things that you actually keep on finding out. So basically right now we are updating the first book. So this one is going to be dollar bill FX club 2.0. So just like the first one, it's going to consist of currency trading and also so this is what I have here. So according to what I understand from the notes that I have, you look at it, yeah, we actually had 3 touches. we actually had 1, 2. On the third touch, that's when we saw the market actually going to the upside. And then here we have 1, we have 2. So I believe the market is going to give us that move to the upside. So right now, what we just need to find out it is where can the market actually turn, where, before it can actually print that move to actually complete the third touch there, before maybe it can actually decide to actually come down. So right now I'm going to go to my weekly time frame. Down analysis. These are top down analysis. Basically with time frame where we can actually find out entry points. Okay. So this is what I have now. On the weekly time frame, what we can see right now, the most recent zone, actually this area. Let me just highlight it there. Okay. So because previously you saw the zone that we had actually had there, it actually got respected and the market actually went to the downwards. And also another thing, guys, if you can look at it, if you can look at this from those who are my students, they know very well that some of the things that you have to look at in the market, they're actually there. They're just gonna guide you. So basically here with this small candle with a long wick and a small body. So basically we expect the market to actually come back and fill up that candle before we can actually print that move to the downwards. So right now we have 2 confluences. We have the third touch that we're expecting from them, and then as well as what? As well as completing of this completing of this candle, the wick of that candle. Okay. So this is the weekly time frame. So just like I said, right now this is what we have. And right now, if you can look at it, guys, we have this area of which we are going to be expecting buying entries. We're going to be expecting our highest point that we have. It's going to be 20,078. So basically, we're just going to be buying there, and then we're going to expect the market to actually go all the way to the upside. Other things, other tools that I actually use that actually show me or give me the confluence on confidence, knowing that I have more than 3 confirmations before I can take actually take that buy. Let me change the color of this so that people can see it. Okay. So what you can understand from this, this is a Fibonacci retracement tool. It's actually quite effective if used with the right technical tools. So basically right now, between the 0,50 and the 0,68, this is what we call the golden zone. So the reason why we call that the golden zone is because right now, by using this a lot, we have actually investigated that once we have a Fibonacci retracement tool drawn, let me say a Fibonacci tool drawn just like that, we know that between the 0,50 and the 0,618, that's when the market it can actually find those retracements. But then the most effective one, it can be the 0,50. The 0,51, it is the one that is actually more effective because most of the times, while using the Fibonacci, what we have actually figured out is that during those times, during those areas, that momentum. So in this case, this is what we have here. We have the 0,50. It is exactly there. So the market doesn't exactly turn on the line. It can still go down a bit before it can actually turn. But then what we do know is that it's gonna turn and it might not actually even break below. I was actually discussing with you all with this candle. Remember the candle that I said the reason why we're gonna expecting another confluence that we have for this buy is because we need to fill up that candle. This candle with a small body and with a long wick. So we need to go and fill up that momentum that was actually left there before maybe you can actually find those selling entries. So now if you can look at it here on this area, while the market was actually going down, going to the upside, I mean, printing those higher highs, higher lows, higher highs, higher lows. What you can actually see it is that this area here, it was the last area whereby we actually had a higher low. So in order for us to actually in order for the buyers to actually continue with this buying momentum, they don't have to actually break below this area. They don't have to actually break below that area. And as well, what you can see from there, it is that here we had a small body, right? But then we had a long candle, a long wick. So basically here the market can actually print that area, that move, and then from then we can actually find those buying entries. Okay. So basically, this is what we have. So now, because remember what I said, trading is all predictive and not it is all rate. Just like I said, the trading is all about being reactive and not being predictive. So we're not gonna be looking much into candle fillings and then now you're gonna expect the market to actually come back down there to touch there before you can actually buy trades. These are the most important rules is to buy and sell on major zones. It doesn't have to see it doesn't have to do with candle fillings and whatnot. Candle fillings, we just know it because it is the knowledge that we have actually accumulated. But the most important rule is to buy and sell on major what? On major zones. So right now we are going to be taking our buy. It's fine. It's fine. Okay. It's fine. But then what are we going to be doing? We're going to be taking those buys. We're going to be taking those buys there. Our stop loss, where can our stop loss be? Our stop loss can be slightly just below. Let me and then our stop loss is just going to be slightly below that candle. Okay, let's go to our daily time frame, because I feel like the right stop loss and the right take profit. Okay, and also if you can look at this, you can see that the market has already broken that that wedge actually go. So whatever that we are having here is just a retracement of the upward momentum or upward movement, but then we still go into the upside. So I'm also going to draw my highest point. My highest point being that one there, just like that. And then okay, fine. Let's go to our okay. Yeah, I'm also going to add another one. I'm also going to add another zone, because right now what I'm seeing, these ones that are from the monthly time frame, but then here when go just like here, the market turned, came back to 10 again, supported there, then it resisted there. So this one is also important. So I'm just going to leave it just like that. So that's what we have. So let's go to the daily time frame. Okay, on the daily time frame, what do we have? Remember, we expect the market to actually buy. So what we're going to be doing there, we're going to be taking our buying entries there, and then I'll take profit. You know where our take profit is. Our take profit is just going to be there. Remember, in trading, you have to be patient. This move can take 1 month. It can take 1 month, or it can take 2 months. The profits are going to be huge, if you get me. The profits are going to be huge. So you need to do what? You need to be patient. Patience is key. Patience is key. Because if you can look at this, yeah, it's from 800 up until what? That's like 10,750 pips. 10,700 or 20,750, because from 18,000 from 1,800, sorry, from 1,800 to 2,075, that's like how many points? That's like 20,750 pips. Let me use this. No, it's 2,000. It's 2,000. Sorry about that. 150 pips from 1,800 to 2,075. We're talking about 1,850 pips. 1,850 pips. That means that with 0.10, you're looking at something around $1,850. Standard load 1.00, we're talking about 18,000. We're looking at 20,750. Or with 0.10, we're looking at 2,750. Basically, you can see that here we're gonna be looking at actually making lots and lots of money with just with just one move. Okay, so basically, if you like, here's a simple example. Let me say, for an example, we actually built these rentals rooms, but like, I don't know, probably built like 20 rooms. If you're too patient to wait, let me say you spend 3 million rands to actually build or whatever you build there. That investment alone, it can take 5 years to actually return the money that you actually invested on it, before it can actually give you profits going forward. If you're too patient to actually build something like that and be able to wait for 5 years to actually make the money that you use in order to build that before you can actually make profits, you can, you can wait a month or two. You can wait a month or two. And what we're talking about right now, whatever that we're actually talking about, we're talking about psychology. Whatever, if like you can be able to actually apply this in real life trading, then you can go for an investment. People are able to invest with banks. Take 100,000 to FNB or RMB for 1 year. You sign a contract of 1 year. You're able to wait for 10% of your money in a year, but then you can't wait for, like, we're talking about more than 3,000% of your money in less than 2 months. So people need to actually work on their psychology when it comes to trading, because I feel like it's very, 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 very important. It's very, very important, actually. Okay, if we're going to be taking our buys in. If you can look at this, this was around when did this actually happen? I'm trying to look for the exit date. Wait a bit. Look, you see this move? This move only. It only happened in how many days? It only happened in 24 days. And if you can look at this move, it only less than 2 months, maybe a month and a half, and you would have made a lot of money from it. A lot of money. You're in your trades. So you're just gonna keep on making a lot of money, always, a lot of money. So now we just want to wait for this market to actually get here. And then once it gets here, we're gonna be taking our buying trades. Look, there's a better way of actually entering trades. There's a better way of taking trades. If like you want to be a trader that actually follows safety, there's what we call an M and a W pattern. My students know. If you want to know about it, you can actually subscribe to our course. Go to our Facebook page. Look for my numbers. They're there. Then send a message on WhatsApp. But then if like, because let me just make a simple example. I want to make a simple example. Look, we know that the market doesn't move. The market doesn't just move like this, right? The market moves in phases. There's an impulsive move. There's a retracement. There's an impulsive move. There's a retracement. There's an impulsive move. But then it's still going to the upside. If you can look at this. There's a retracement. Let's say there's an impulsive move. Okay. Look at this. I want to show you something. I want to show you something. If you can look at this, so here we have the higher highs, then here we have the higher lows. Higher highs, higher lows, higher highs, higher lows. So as it is right now, and then we have higher highs, then we have higher lows. Okay, we have higher highs and we have higher lows. So this market is actually basically just going to the upside. Okay, this market is going to the upside. When you want to enter a buy, okay, because the market is going to be going to the downwards. If where you're going to be seeing the market actually creating a lower low and attempting to create a lower high, going to have an extended W pattern, or it's going to bounce above or at the same level. The most powerful one is when the market doesn't actually lower low, and then you see the market start doing this. What can you conclude from this? What can you conclude from this? What we can conclude from this is that the market, it is no longer a bearish market, according to what we see, according to the psychology that we have. It is no longer a bearish market because right now it failed to actually break below the lower low, and right now it is actually broken above the what? The lower high. This basically means that the market right now, it is that means now the market, what is going to start doing, it has already started printing higher highs and higher lows. This is what we're going to see. What actually happened here? The most important part, it is this W pattern here. Same thing applies to when the market is actually going to the upside and you're looking for a selling entry. You're gonna wait for that W pattern, M pattern, I mean, to break the neckline, wait for a retest, and then we're gonna see the market sink. Going down, you're gonna wait for that W pattern, break the neckline, come back to the 0.50 or 0.38 on the Fibonacci. Then from then you're gonna see the market actually going to the upside. Okay, it's fine. Let's just carry on. What happened here? Let's look at it. It was going to the upside. Okay, but then when Goji had actually that came back to retest with this candle at the same time, and then from then we saw the market actually sink. Let's look at what actually happened below there. It was on a downtrend. The market was on a downtrend. This is what we had. But what you saw happening is we saw the market actually breaking this above this double pattern. And then after that, we saw the retracement. Let's measure the retracement. For some people, they were going to look at this huge double pattern. For some people, they were just going to look at the small double pattern when you're trading smaller time frames. Because on smaller time frames, that's when you can actually be looking for taking short-term entries. But then if like you're looking for long-term entries, just like this move going to the upside, you're going to wait for this huge double pattern. Just measure the retracement. When you're going to measure the retracement, we just want to measure this channel there. There's that this market actually, it came back to retest to the neckline. This market actually came back to retest to the neckline, actually printing those huge buys. So the market actually printing those huge buys. In there, you can actually wait for the same thing. When the market actually gets here, you can, or if you don't mind withholding and going to draw down, you can actually just buy. Okay. How long have you been recording? I don't know. Okay, so and I also have a journal myself right now. So I'm writing down. I'm going to be buying gold at what price? 17,000. 90. Stop loss at 1765. Okay, 65. So I know I'm risking how much? I'm risking a total of 250 pips. I'm risking a total of 250 pips. Okay, fine. My take profit one. I'm gonna take it at 18,077. I'm gonna take it at 8 this at manager zone at 19,000, and I'm gonna be aiming for 20,000. This one I'm just gonna leave it. So basically, when I open trades, I open 3 trades. If I'm looking at actually per trade, maybe let's say according to the month that I was supposed to risk 0.10 per trade. That means then I'm going to divide it into 3. I'm going to say 0.03, 0.03, then the last one I'm going to use it 0.04. The 0.04, that's the one I'm going to hold for a very long time. Those 2 ones, I'm just going to be putting them at the take profits that I actually have written down. 20,070, 75. 200, let's move on to something else. GPUSD. GU, okay, GUSD. GUSD. This happened. Killed it. Move on. Same thing, nothing is changing. Start from the month. Right now, since you know how we actually analyze this, I'm just gonna start there from the highest point. You know how we analyze now. Right now you should know how we analyze. Just draw where this thing turned. Just draw lines where this thing actually turned. It will make sense. You understand what's actually going on? Just draw lines, just draw lines. It's fine. You're gonna investigate it later. We're gonna look at what we call zones. They're very important. You see, all the way to probably 2000. This was around 2003. All the way to there. You see, gonna see what's actually gonna happen with this. Should I draw another one here? So then I'm gonna draw my wedge from the highest point. Ta. Connect to the recent one. Okay, sure. Okay. If you look at it, the market actually always respects. The market always respects this thing. So yeah, I already have 1, 2, 3, third touch. So I'm expecting the market to actually at least give me a push to the upside. Let's see what's actually gonna happen here. Let's go to the weekly. To the weekly, I'm just gonna add the ones that I missed. The ones that I missed from the monthly time frame. Just gonna draw another one here. You see, supported, resisted, and then up until actually let that move come to the downward. So when they will guide me on my take profits, so I have that. I can draw the other one at the bottom, but then that won't be necessary. That won't be necessary. So according to this broken blood, so I'm just gonna be drawing this, okay, sure. Let me remove this one. That means that we know that the market is still gonna push to the downwards. Okay, fine. You remember the double percent that I was actually talking about earlier on gold? It happened, is it? Is it? So right now, according to what I have here, this is what I have. Okay, it's fine. Just put it like this. I had a candle filling here, small body, long wick. So the market is actually attempting to actually fill up that candle. Okay, that I'm trying to see. So the Fibonacci actually just drag it from the start of an impulsive move up until where we're at. According to the weekly, what you can see, okay, we have the 0.381, 0.382, and then I have the 0.50 with my magic key. So yeah, this is all that I can actually draw. This is what I actually have. Also what then okay, sure. This is what I have. Let's go to daily time frame. Okay, on the daily time like this, like that. This is a support that I have. This is a support that I have. Here, I cannot just expect the market to actually come back, sink all the way to down here. Nah. Here, I'm gonna be taking my bias. Okay. So let's go to H4. You see, a nice support there. Back to the daily, so that we can take our buying entries. Remember the Fibonacci. I said what with the Fibonacci? Also crucial. There's the retracement level as well. It's very important. 0.382 and also the 0.50. Those are important. Let's go to daily. Let's go to daily. You see daily 0.32 aligns exactly with the support. So here we're just going to be reactive, not predictive. We're actually going to break and come back here if we can actually go to the upside. But then how do you know? I mean, like we have support here. Why can't you react? What more important? What makes this support more important than the other important? Because right now at this era, look, if the market can actually break below this era, that means the market is no longer on the buyer side. Because right now, remember, it keeps on creating what? It keeps on creating impulsive move, retracement, impulsive move, retracement. But then if you can look at this, the retracements never impulsive move, retracement. So do you think if like it has actually shifted from the buyers to the sellers because of what it would have actually broken below the structure? Yet it's not gonna happen. If the market actually breaks below that area, it has shifted. The market would have shifted. So this is what I want to see. This is what I want to see all the way to there. This is what I want to see. Because remember, we're still on the bullish side. We expect the market to actually come back to give us a third touch there. So that's gonna be around buys, sharp. Stop loss just below the structure. Simple. Then on H4, that's where you can play around with your trend lines. On H4, is how I was gonna draw my trend line. Then also remember, you draw the bottom one, you also have to simple. I'm done. So it gives me a third touch here, then I buy. Simple. So USD buy at what is the price? 1.1841. Stop loss at 17. Yeah, 17. TP1 at 1.2455. The last TP. The second one you can actually take it here by the trend line. The one that I draw on the weekly 1.28. 1.2800. The last TP at 1.3300. It's fine. And then you come in with your wedge, just to find more entries, just to find more. Then when you add, you shouldn't forget that. Don't add No, don't do that. Don't do that. Our simple trading is very simple. So now you see, now I have a full image. I know that if it once it comes here and touches there, I'm gonna be buying. Going up with it. I'm gonna be safe again. You can just wait for the market to actually give you a double pattern, and then sell, and then buy. I mean, sorry. Let's look at on the daily time frame. Daily time frame, we had actually taken this buy. Then we knew that the market is to actually come back here, and then food can actually sell. If you can look at this, there's a M-pattern broken retracement. Voila. Let's use the Fibonacci. I want to show you guys something on the impulsive move only. You see the impulsive move, it can actually sink. And the 0.618 was actually lining up with what? With the neckline. With the neckline of the M pattern. So we had that. Some candle filling that needs to be filled. There was some candle filling that needs to be filled. We have a short body, then we have a long wick up there. So yeah, that's also another take profit. You can use that as well. It's gonna guide you to 270. We have 2455. So we're good. So I'm gonna do some more videos because right now my electricity is going. I'm actually gonna do some more videos for you guys so that you guys can actually get to understand this. This was Dollar from Dollar Bill FX Lab. See you all guys on the next one. Hope you all guys enjoyed your weekend. You all guys should just wait a day or two to actually take these trades. They're gonna be very, 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 very crucial and important. They're gonna benefit you all guys in a way that you have never actually imagined. Okay. Don't forget to actually give me a feedback on the trades and what you would like to see next. What would you like me to actually analyze next? See you all guys. Bye.